Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, how did Forum Energy's drill programs at Janice Lake and Fur Island work out this winter?
Well, last year they had programs planned for both Janice Lake and Fur Island, but they got interrupted by the COVID lockdown, and very little drilling was done. And in the case of Janice Lake, Rio Tinto had to abandon building the winter ice road. Actually finished building the ice road, but they were just starting to ship stuff in, and they had to stop because everybody went into a panic about COVID. This year, the problem was the winter. Winter really didn't arrive until February, and then it was one of the shortest winters ever experienced in northern Saskatchewan. By mid-March, everything had become very soggy. And so both companies, the Orano, which is the farm-in partner on the Fur Island uranium project, and Rio Tinto, which is the farm-in partner on the Janice Lake project, had to cut short their programs and get out of there. So that meant only about half of the planned work got done this winter, which is something of a disappointment. In the case of the Janice Lake project, where Rio Tinto can earn 80% by spending up $30 million, they were going to do 6,000 meters on the Refuse, Roberts, and Juno targets that they developed last summer through this shallow RAB drilling program, rotary air blast, which only goes down short distance, and it's really more a surface mapping tool for where there's overburden covering the bedrock. And they also wanted to drill some more target holes into the Jansen target because they figure they have enough to put together a 43-101 resource estimate on that. That's not going to be the basis for a future mine, but at least it demonstrates the concept that this copper-silver mineralization hangs together in this region. But they only managed to get 9 holes for 2,300 meters done along 4 lines on the Refuse target, which represent about a quarter of the 3,000 meter long, 400 meter wide target that they were supposed to test this winter. Now, what Janice Lake is a sedimentary basin very similar to the Woodjam project in Russia, where it is still flatlying. In Russia, this is a 2.8 billion ton deposit of 1% copper and 12 gram per ton silver. The only problem is, because it's flatlying, a mountain managed to build itself up on top, which is way too large to remove in terms of the relatively thin beds of this copper-silver mineralization. So that will have to be an underground mine. At Janice Lake, there is a 52-kilometer-long basin of similar nature and age that has been tilted on its side. And the original Janice Lake area, where all the historical drilling has been done, about a 6-kilometer segment of it, it has shown that there is the similar style of copper-silver mineralization. It's lower grade, about 2/3 of that of the Woodjam project, but because it's tilted on the side, you have these long linear bodies, basically at surface, exposed at surface when you scrape off the overburden, that could be mined as linear open pits. And the concept that Rio Tinto had was that, these could exist along the entire trend of this basin and be readily accessible to low-cost mining. And because there's likely folding of the original basin, there may be additional limbs to be found to the east. And they did a big mag survey to highlight this area, and yes, sure enough, there are these linear mag trends, several of them. Refuse is on the western one that lines up with the Janice Lake Jansen area, and Roberts and Juno, which are completely undrilled and new, and where RAB drilling did indicate geochemical support for copper-silver mineralization, they are parallel to the east. And so this is the refuse drilling that was supposed to happen this winter was an important proof of concept to show that this largely unexplored basin, 52 kilometers long, has this mineralization in these various areas along the entire strike of it, and that the combination of magnetic surveys and RAB drilling can be used to identify the hot spots where the mineralization is elevated. So they got their 9 holes done. They had to pull out. It just got too slushy. This is an area best drilled in winter. When it's frozen, you can drill it in the summer, but it's more expensive helicopter support drilling. And they do plan to go back, or they haven't made it official that they're planning to go back, but they left the 2 rigs at the 80-man campsite, which they finished hauling fuel in this winter so that they can carry on for a long time there. And there's probably about $2 million left to be spent on about 4,000 more meters. So it is very likely that in June, after they reviewed the results from the refuse drilling they did manage to get done, that they will resume, and they'll probably test the Roberts and Juno targets first, because these are undrilled and could open up these parallel zones in this system. But from what I gather, copper has been observed in the refuse intersections. The drilling has confirmed, yes, this structure is there. It is mineralized. But what we won't know until we get assays is what is the thickness and what is the grade. And what we want to see are good thicknesses that lend themselves to open pit mining. And also, we would like to see better copper and silver grades than we have seen in the Janice Lake area. If they end up similar, well, that's not a deal breaker, because that's what Rio Tinto expected when it first went into the project. It's looking to establish a very large, long-lived resource. But if we could see better grades, that would be good news. And at Fur Island, it was quite disappointing because they only got 3,000 meters done out of 5,000. And these 10 holes that they did, they were on the land-based portion of the target area. The best targets are under lake. The lake just never got thick enough ice on it to support a drill rig, so they only drilled the land-based ones. I'm not holding my breath that we will get any sort of unconformity uranium high-grade style results sometime in May, June. But I'm pretty confident that Orano will go back in there again in January of 2022, and maybe then we'll have a serious winter where they can do the full 12 weeks of exploration that's normally done from mid-January to mid-April. And in terms of watching for a discovery, I think the story this summer is going to be the Love Lake project. Last year, they did a big mag survey over the entire project. It revealed mag targets, which are interpreted as massive sulfides within this ultramafic complex, and these could be systems, magmatic systems similar to Voisey's Bay or the Julimar project of Chalice Mining that has given that company a $2 billion market cap in the last 12 months. But the mag target could also be caused by something else other than feeder systems for sulfides. So in May, they are doing an EM survey, an electromagnetic survey, on 5 mag targets within this overall project. And the purpose is to detect conductivity, which is not going to be caused by magnetite or anything else in the rocks. And this type of setting does not have graphite in it, so conductivity will not be caused by graphite. It could be caused by boring sulfides, such as just pyrrhotite or pyrite. You won't know until you actually drill it. But this program, they will do it in May. They'll have the interpreted results by the end of June, and we'll be looking to see if these mag targets coincide with conductors that deserve to be drilled. They have $3.3 million in the treasury. 1.4 million of that is flow through. That is earmarked for the Love Lake program, which they hope to get in August. An important milestone will be that they have indeed secured a drilling crew to do the drilling. This is now becoming an issue in Canada because of A lot of money was raised last year. All the fuss has been about the delays in the assay labs for turnaround. But another problem is if you don't have a drilling contractor nailed down, you may have all the money in the world, but you won't be able to drill your targets. So in this case, watch for confirmation they have a rig lined up for drilling in August, and then watch for evidence that there are strong conductors associated with these 5 mag anomalies that last year's survey identified. And of course, it would be in September or so at the earliest before we have any indication that a significant massive sulfide-bearing nickel, copper, possibly platinum, palladium group metals has been made by Forum Energy. The weakness in the market, by the way, is due to a 15 million unit private placement done in December at 10 cents with a full warrant at 15 cents. It just came free trading. So the market is going to have to endure the usual clipping of the warrants and flipping of the long position. And since the stock was in the 30-40 cent range versus a 10 cent financing price, you can expect that people are going to grab the money and run and then just ride the warrant for a free lunch on the company. But we'll work our way through this, and hopefully we separate the clip and flippers from the long investors who are counting on Rio Tinto to really confirm Janice Lake is a serious copper-silver play, and for a absolute blue sky upside discovery to be made at the Love Lake complex.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, what's next for the Cerro Caliche gold project of Sonoro Gold?
Well, Sonoro Gold has just completed 44,000 meters of drilling at its Cerro Caliche project in Mexico after raising $8 million last summer at 22 cents with a full warrant, much of which paper the market has had to eat since it came free trading late last year. And they just raised another $3 million through a financing at 18 cents. So in 4 months, we're going to have to see what the clip and flippers do with that financing also. But this money came in from a different type of audience. What was happening in the summer is they had a dual approach to Cerro Caliche, which had historically been seen as this low-grade, low-sulfidation epithermal system that lends itself to an open-pit heap leach mining operation. And when John Darch got involved several years ago, it was his goal to just turn this into this cash flow generating operation based on this scenario. But last year when gold was ramping up and the market was really strong, people also became very interested in the deeper bonanza grade potential. And that was the period where if you flashed some high grade in front of Eric Sprott, he would snap at it like he was some sort of Chinook salmon and just snap it up. So the market was very much into high grade intersections. So the program they raised the money for was a dual program of core drilling to test the deeper potential of this system, which had never really been assessed, for high-grade bonanza zone, and a lot of reverse circulation, RC drilling to delineate these various zones within the system. And there's about 3 or 4 parallel structures, of which the historic estimate, resource estimate 43101 was for the Yaponese zone, which indicated about 200,000 ounces of 0.4 grams per ton. That's at the low end of what you want to develop, but it's all oxidized. They have yet to encounter any sulfides in this system. So it lends itself to low-cost heap leaching. And John Darch had tried to get these Asian EPC companies to get involved to basically lend the money and then pay it back to themselves building this mine. But that all fell apart at the start of last year when the COVID crisis hit and travel was restricted. So they shifted and raised the money and have now gone with this plan of delivering an updated resource estimate and a PEA by the end of July. So drilling wrapped up at the end of April. They ended up needing to raise more money because they were having such success with the RC drilling. The diamond drilling did not really indicate any fantastic bonanza zones at depth. However, they did get high-grade intervals in two parallel structures to the northeast and to the southwest. In the northeast, the El Rincon and Abejas appear to be connected, so that's a potential significant future source of tonnage. And in the to the southwest, the Cabeza Blanca to El Colorado has also yielded some high-grade intersections, which could also make a difference down the road. But the main part will be the middle, where what was originally several separated zones appear to be coming together as they did much higher density drilling that allowed them to see the grade repeat itself. And this is all going to go into the resource estimate. They're hoping to at least double the resource to 400,000 ounces. They would like to see it get to 600,000 ounces. And what they're hoping is that there'll be enough tonnage to support a 15,000 ton per day open pit heap leach operation for at least 5 years. Now, 5 years is not what you plan a mine for. You plan it for at least 10 years. But they figure that what the market wants is cash flow. And at the scale of 15,000 tons per day, they would be only generating 50,000 ounces per year from this project, so it's not like super fantastic. But if we end up in a rising gold market and they do successfully bring this on stream, then this company will be priced on a cash flow multiple basis rather than on a discount to the after-tax net present value. And the stock's now sitting there at 17, 18 cents because the market wants to see what this PEA says about the economics of this project and also what is the resource that they plan to mine. And the company thinks that it can have a permit to construct as early as August, September of this year. And the key is that can they attract this EPC or even straight project loan financing just based on the PEA with a 5-year mine life. And the big question will be, what is the CapEx? Now, I've done an outcome visualization for a 15,000 ton per day scenario, and I've borrowed numbers from Argonaut's San Agustin project, which is similar in nature and has the same scale. That has a hefty CapEx of $40 million. And the question is, if that's the CapEx, would they be able to raise it, or is their CapEx going to be lower? And I've run this model at 0.4 grams per ton with a 72% recovery. And that's another thing we're waiting for is the metallurgical studies that they have done. Can they boost it into the 75 to 80% range rather than the 72% that was the result of earlier metallurgical studies? But the outcome, after-tax net present value in Canadian dollars for this scenario based on a full 75 million tons is only about 220 million Canadian. And based on the 166 million or so fully diluted outstanding, that would represent a future price of $1.32 per share. So this is not a go-to-the-moon discovery type of story. This really is a make a mine out of an existing story, the hope to discover something fantastic at depth. For the moment, that has been shelved. That might come in these two structures to the northeast and to the southwest down the road. But for now, we're looking at a low-grade system, which we hope to see improve to 0.5 grams per ton rather than 0.4 grams per ton, a relatively low capex, and then see if John Darch can do his magic and raise project financing in the form of a loan and get the permit to start building this in sometime in the later part of this year, and have it up and running by the second quarter of next year. And if that is all accomplished, that would be an extraordinary feat. So for now, we're in kind of a lull, waiting for these key documents, the updated resource estimate, and the PEA to tell us what this thing would be worth. And once we have discovered their cost numbers, then we can do the optionality game much more effectively, because then we say, well, what if gold's 2,000? What if it's 2,500? And that's when this thing really comes into its own, is when people can see all these numbers and then use it as a bet on the future price of gold.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, did Consolidated Woodjam ever figure out what to do next at the Woodjam Copper Gold Project?
Well, this week, they finally put out a press release and said that we are going to start a $1.5 million drill program, and it will start with testing the megaton IP anomaly that's several kilometers to the northeast of the southeast zone, for which there has been an inferred resource of 227 million tons of 0.31% copper, calculated by Goldfields, which spent $25 million on the Woodjam project from 2009 until 2013. Goldfields ended up abandoning all its overseas activities and returned back to South Africa. At the time, this project was interesting, a technical success, but neither the copper-dominant southeast zone nor the smaller Deerhorn, Tacom zones really were in the money at the metal prices that prevailed at the time. And in 2015, the Eastfield Group was able to negotiate a deal where they got back the majority interest that Goldfields had earned, which ended up with an equity stake in the company. And then it basically sat fallow for 5 years until last year, with the gold price hitting $2,000, they decided, well, it's time to take a fresh look at Deerhorn, which is different style of mineralization from the southeast zone. It's a high K calc alkaline porphyry system, which is gold enriched, but it's not very big. It's only about 33 million tons with a half-gram gold and 0.2% copper. But they felt that this thing could blossom at depth. Goldfields only looked at it from an open pit mining perspective, and so they started a drill program late in September last year, which was supposed to accomplish two main things. One was to see if there are parallel zones to the southwest of the main zone, where Goldfields wasn't too interested in going because it sits under a small lake, and what happens to the system as it blossoms at depth. And so the first hole, which took forever because they had a drilling crew that just couldn't get the job done properly, that cut through, and it surprised everybody by delivering the best gold grades seen for the Deerhorn project, and best gold grades for the entire Woodjam project area. Then the second hole, it was supposed to be a down plunge hole, because the main Deerhorn zone is a sort of northwest-southeast oriented tabular body, and all the holes had been angled to cross-cut it, and had the grade at the various levels, but beyond that sort of 300-meter open pitable level, Goldfields had never really drilled anything. And this style of deposit, they tend to blossom at depth. And the Red Chris deposit is something like that, which Imperial Mining's has, in which Newcrest has now acquired a majority stake. So the hope was, well, if the gold and copper grade do improve at depth, this becomes a target for block caving type mining. But unfortunately, that second hole, it ended up deviating and exited the structure. So never really got into the deeper potential, and that was a big disappointment that came out earlier this year. And then the third hole, it ended up stepping to the eastern limit of the known zone, and yes, it got mineralization, but it apparently didn't intersect a meaningful parallel structure to the southwest. So the market was kind of bummed out in February, March this year, saying, well, okay, what did we actually learn about this, other than that you spent a whole bunch of money and did get better gold grades than have been accomplished historically? But late last year, they had already started talking about, we need to revisit the southeast zone, because copper had started rising as soon as it was apparent that Biden had won the election in the United States. The world started thinking about, clean energy is going to be back on track. Infrastructure renewal is going to be on the table to possibly have a bill supporting it passed. And the whole market went into an upswing. And by then, of course, China's rebound from its own COVID lockdown had done extremely well, and copper prices were trending up. And so they wanted to test this megaton target, which had been generated after Goldfields left. It had one hole drilled in it randomly by Goldfields when they optioned the property before they pulled out. They were forced to do this hole because the optioners insisted that some holes be drilled right away, even though Goldfields didn't have any geophysical data, and it hit some interesting mineralization, saying, the system that's that southeast zone, it does exist just to the northeast on the Megaton project, but it didn't have ore grade mineralization. And then Goldfields pulled out. The company did an IP survey, and the IP survey said, they drilled on the edge of what could be a disseminated copper system. So they will go in there and drill this target. It's about 1,000 meters wide. It could boost the southeast zone 50 to 100%, and make this a more serious play. But there was internal squabbles about, maybe we should raise more money. They just managed to raise $2 million. They're supposed to raise $2.7 million in December, but turned out to be a struggle. And there was internal disagreement about how quickly to resume work. That disagreement has now been resolved. The only holdup is the roads need a green light. These are all logging roads. The logging roads use them in winter, and of course this winter it proved to be a very short winter. The company had hoped to maybe drill in the first quarter while everything was frozen, but even if they planned to do that, the winter in British Columbia was like that in northern Saskatchewan. It was a very warm, late winter. The roads weren't properly frozen early enough, and then they thawed much sooner than expected. And right now, the logging companies don't let any trucks on it until they are drier, because they don't want the tires to shred the roads and create deep ruts. So they think maybe by mid to late May, they will have the green light, which means they'll be able to start drilling. They have permits and they have a drill contract, so they don't have either of these problems. So by June, they will have a rig on the property drilling the megaton target. And with this type of thing, we should know fairly quickly whether they are into a copper mineralized system, because you'll be able to see the chalcopyrite in the core, and the stock could undergo liftoff. Now, the question is, at 0.3% copper, is this system, what's it potentially worth, even if you make it 50% to 100% bigger? So what I did the other day is I did an outcome visualization where I looked at what would a 30,000 ton per day open pit operation with similar cost structure, similar to other operations, what would this end up being worth? And I was surprised because at $4.26 per pound copper and the sort of assumptions that Goldfields had developed to support the 43-101 resource estimate cutoff grades and that, I come up with a $500 million Canadian after-tax net present value using 8%. And that's a $3.38 a share future stock price for this company. Now, the project hasn't yet delivered a PEA. It has to do its own PEA. But given that it's sitting there at 15, 16 cents, with about 147 million shares fully diluted, that means an awful lot of upside. So this $1.5 million that they initially earmarked for the megaton zone, if this can make it bigger, that will certainly give this project the scale to be worthy of consideration for development. But there's also the moly and gold credits. The gold was estimated at 0.05 grams per ton by Goldfields, but not included in the resource estimate because they didn't have metallurgy for that or the molybdenum, so they ignored it. Plus, the gold may have a fabric orientation within the deposit that is not properly estimated by the angle by which the copper mineralization was delineated. So when they go back in there to infill drill the southeast zone at various angles to upgrade it to indicated category, we may see a gold grade return. So I was quite pleased to see that at 426 copper, this project is actually worth developing. The IRR ended up being over 20%, and the capex was lower than the NPV, which is what you want to see. Now, these are back of the napkin numbers, extrapolations. We need to see an actual PEA. I don't think the company will attempt a PEA until next year. At this point, this is more a discovery expansion type story. They want to see what the megaton is all about. And if that's a bust or lower grade, they will return back to the Deerhorn project this summer. By this summer, hopefully, the funk that gold is in. One of the interesting developments today was a leak on Bloomberg that Biden is planning to impose a special capital gains tax if your income tops $1 million. And right now, you would get your 21% capital gains tax rate for long-term gains plus whatever your state taxes are, which is, pretty reasonable. But if this would eliminate the long-term, short-term difference because it would go to 39% federal, and on top of that, if you live in California, it would jump to 56% with the state taxes. So this could be a potential problem for the general market, but it is a huge potential problem for Bitcoin because Bitcoin right now is subject to the same short-term, long-term capital gains. In the last 10 years, what started off as nothing has expanded to $1 trillion valuation, and people are sitting on enormous profits. And if they decide that next year, that this thing becomes effective next year, you're going to see a massive liquidation run in Bitcoin as all these younger folks who bought this stuff in the early days are sitting on these huge paper profits, all rush to exit, and this will come just as Wall Street is teeing up the boomers' capital to go in there and buy this incredible asset that's going to have great staying power because it refers to nothing except itself and is therefore the perfect Ponzi scheme, which we can take all this money from the boomers that when the Fed keeps buying $120 billion worth of bonds each month and gives them cash, and they have been buying the stock market. Now we'll get them to buy Bitcoin instead. Well, when Bitcoin goes into a downtrend, because everybody's rushing to the exits either to, beat the crowd or to beat a major tax hike that in essence more than doubles what you would otherwise pay for when you liquidate, that's going to put a bit of a damper on the enthusiasm for Bitcoin. And gold, it's the same as with the stock market. for gold stocks. Gold itself already has a punitive 35% federal gain because it's treated as a collectible, so it's not at all bothered by this development. Anyways, the consolidated Woodjam, the copper market remains strong. The question with that outcome visualization that I've done is, okay, is $4.25 a pound copper the new normal, or is this a temporary blip? Are we going to sink back below $3 over the long run? I think that with the whole clean energy trend having tremendous momentum behind it, and copper being one of the metals which we know is going to be part of the future electric vehicle, we're not so sure about whether manganese, nickel, or cobalt, or these other various metals that go into the battery will be part of it, but copper certainly is going to be part of the future electric vehicle industry. So I'm optimistic that we're going to have strong copper prices, and a project like this, it's good to see that Bill Morton and Glenn Garrett now see eye to eye. We need to also focus on the southeast zone, see if we can make it better, and if we do, definitely raise the money to do the feasibility demonstration work needed to show that this thing deserves to be developed. And it's in an area where infrastructure, everything is nearby. It's a patchwork of logging. You look at it from Google Earth. This is not some pristine area where you're going to have every NGO in the world beavering to oppose it. And the First Nation bands in whose territory this falls, they're all engaged in commercial activity and logging and ranching. So having a mine in their backyard is not going to be something that upsets their lifestyle that they've developed.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.